W.D. Gaines' 24 cardinal stock trading rules are: 1. Amount of capital to use. Divide your capital into 10 equal parts and never risk more than 1/10 of your capital on any one trade. Rule 2. Use stop loss orders. Always protect a trade. Rule 3. Never overtrade. This would be violating your capital rules. Rule number 4. Never let a profit run into a loss. After you once have profit, raise your stop loss order so that you will not have no loss of capital. Rule 5. Do not buck the trend. Never buy or sell if you're not sure of the trend according to your charts and rules. Rule 6. When in doubt, get out and don't get in when in doubt. Rule 7. Trade only in active markets. Keep out of slow, dead ones. Rule 8. Equal distribution of risk. Trade in 2 or 3 different commodities if possible. Avoid tying up all your capital in one commodity. Rule 9. Never limit your orders or fix buying or selling price. Rule 10. Don't close your eyes without a good reason. Follow up with stop loss order to protect your profits. Rule 11. Accumulate a surplus. After you have been made a series of successful trades, put some money into a surplus account to be used only in emergency or in times of panic. Rule 12. Never buy or sell just to get scalping profit. Rule 13. Never average a loss. This is one of the worst mistakes a trader can make. Rule 14. Never get out of the market just because you have lost patience or get into the market because you are anxious from waiting. Rule 15. Avoid taking small profits and big losses. Rule 16. Never cancel a stop loss order after you placed it at a time you made a trade. Rule 17. Avoid getting in and out of the market too often. Rule 18. Be just as willing to sell short as you are to buy. Let your object be to keep with the trend and make money. Rule 19. Never buy just because the price of a commodity is low or sell short because the price is high. Rule 20. Be careful about pyramiding at the wrong time. Wait until the commodity is very active and has crossed resistance levels before buying more, and until it has broken out of the zone of distribution before selling more. Rule 21. Select the commodities that show strong uptrend to pyramid on the buying side and the ones that show definite downtrend to sell short. Rule 22. Never hedge. If you are long one commodity and it starts to go down, do not sell another commodity short to hedge it. Get out of the market, take your loss, and wait for another opportunity. Rule 23. Never change your position in the market without a good reason. When you make a trade, let it be for some good reason or according to some definite rule, then do not get out without a definite indication of a change in trend. Rule 24. Avoid increasing your trading after a long period of success or a period of profitable trades. You know the catchphrase. Study it, analyze it, adapt it. Peace.